All right. Hello, everybody. I think it's working. Double check here. Can you hear me all right? See everything? Got a little error message there, so I'm not completely sure. All right. We are good. Okay, great. Just making sure. Give everybody a moment or two here to get on. Hope everyone had a nice weekend. Our expectation coming in the week was to move lower, and sure enough, we're going to start the week off a little lower. The Nasdaq future is down about 1%. S&P a little less. And good morning to each of you. Finally back to our full schedule, the first full schedule of the year. All righty. Let's go ahead and circle back to last week. This is kind of where we ended up. Felt pretty good about a move higher, at least to start the week. And honestly, at that stage, we thought might be running ourselves back to some new highs, but that rally was short lived, and we rolled right back over, which, if you recall our larger breakdown, uh, not too terribly surprised about rolling back over, especially when S&P and Nasdaq have been doing better than others. But if you look at the Russell last week seemingly finished up and broke out of the bottom of a bear flag there. So that implies there's more coming to the downside for the Russell. And more often than not, the Russell does not fall on its own. Nothing about the NYSE's close last week was too particularly spectacular. You'd even make the case of a similar type look here, somewhere in that area, if you wanted to, around there. So you could make that type of a case. Man, over there. So the bearish breakdowns there at the end of the week weren't really all that surprising. But when you look at these guys, Nasdaq and S&P don't look as bad, but you look at these guys, and they certainly paint picture for lower. Uh, Pretty nasty looking day there for the Dow on Friday. It's kind of its worst day it had going. And again, kind of similar, just different forms of the same, I guess you could say, same message being sent, right? So, uh, there, and then you got to see everybody kind of doing the same thing, right? So, you look at these three, and they all kind of imply that same breakdown, and they all did, right? You got a descending triangle here, that little wedge flag type thing on the NYSE, and then the Russell's good old fashioned run of the mill flag there. So all three of these guys were kind of making a pretty clear setup, and later in the week we kind of pointed that out specifically with the NYSE here. I'm sorry, the Russell and the NYSE, but what they were showing, and sure enough, they made the way to the downside. Nasdaq and S&P hanging on a little bit better, but you know, uh, thought maybe Nasdaq trying here, but if you look at today, we're going to drop again. So, um, we're trying to give the bulls the benefit of the doubt here, but with that type of formation we have there, then you come back to the S&P. This line running through here, not only resistance, but you'll notice support multiple times, and breached it briefly on Friday. Looks like we're going to go below it again today, at least to start. And those of you who've been on these calls for a while may remember this old 57.65 area, but it sure seems like we need to be thinking about the bottom of this channel as the most ideal target. So we'll see if we get there. Obviously, we know at some point in history we'll get there. The question is this leading us there? And all doom and gloomers aside, it wouldn't be much more than what, a 5 or 6% type fall from the peak. So it's not the end of the world or anything. Um, Going to depend on how quickly that happens. So it's not like the end of the world. Um, Markets pull back, and they correct. Although, I keep reminding everybody that the S&P has not been able to notch, a nice juicy correction. And by that I mean in the technical definition. I realize there's a lot of clowns that like to act like everything's a correction so that they can, you know, cheerlead the bull side, right? So remember, I'm not sure which is more obnoxious, the doom and gloom bears or the cheerleading bulls. I kind of think the cheerleading bulls are more obnoxious. Um, but I don't know, either which way, you got to kind of weed that type of stuff out, you know? And as I like to say, I think the adults in the room know what a correction is when we're talking about it. And that's when we're looking for that 10% or more. And since we put in that low, the S&P is yet to do that. This here was pretty darn close. I want to say maybe it kind of tapped it or touched, but just barely. But this was about 10%. This guy, much swifter, I think was about 10%. But this is why once we start a sell off, we look for different levels, different areas. Um, I don't really use the Fibonacci thing too often. It's certainly one way to do it. But I just look for important levels. But one thing I always like to remind everybody is that 10% area, because it's not uncommon for that 10% area. It is as if the market is saying, no, I don't want to go into correction, right? I'm willing to pull back as far as possible without going into correction, right? And so you can see perfectly why that is, why we kind of, but, any number of things can hold a market up. It can be the every once in a while, the 200 day, can give you something. You can see back here, you kind of got a little bounce on a 200 day, but then breached it on the next leg down. So that could, so, we always want to just kind of look at everything that might be realistically But I think that channel, I think that seems like where we're trying to get to, and that would allow us, as of right now, right around 2%, a little less than 2% fall. And again, if we got there, wouldn't be anything spectacular, right? I think 6% at best. So nice, healthy one. At this point, I think that you go back a couple weeks, and I was highlighting some of the bigger picture things to be concerned with. I think I saw another one isolating down. We looked at the top 10 stocks, right, and the largest weighting in the S&P, and I saw a very similar breakdown of the top 5 stocks in the S&P, the weighting, and again, just like the others, is top heavy to if it's ever as it's ever been, and that has not, historically ended well for the market. So certainly, everything seems to appear the clock is ticking. Um, but I was kind of thinking maybe we had one more set of new highs in us, and maybe we do, maybe we don't. So that's why we update it every week, see if the market's telling us something different. And for now, what we know for sure is we're going to open up a little lower today. We have our kind of lines in the sand drawn, and there's nothing happening this morning that we didn't expect on Friday. Those of you in my mentoring program, you obviously have your newsletter posted this morning, and we kind of reiterated what we talked about on Friday's call. Right, expect to start the week lower and see where it takes us, and we'll go from there. Right, we see some signs of reversal. Obviously, we'll cover that throughout the week. Obviously, one of the benefits of my mentoring program is we have a call every single day, except for Tuesday. But that way we can update it as we go along all week long. So when we see something that would say, "Hey, maybe time to get bullish," we can discuss that a little bit, like we did 2 Thursdays ago. So, so anyway, that's what we're thinking on the overall market. Hey, other people join in. Hey, good morning, Eric, Barry, everybody. So yeah, so we're gonna start lower, and if you want to look at a time to maybe take some shots on the bull side, watch this area right here, sitting just above 5,700 ish right now. Obviously, every day that goes long, this thing is rising, so keep that in mind. And yeah, we'll go from there. A couple charts we're keeping an eye on. We talked about this repeatedly. Keeping an eye on Tesla, and we are mostly watching for. Well, I mean, we can watch both sides, but kind of watching to see if we could take out. It looked as if we were heading our way down to at least the old 360. Right, that was the breakout point. Maybe even to the bottom of what could be just a big bull flag. Right, like if you pan out, could just be a big bull flag. Probably is. Right, pretty nice little run up. Okay, you're running it more than doubled in this little stretch, and certainly looks like a nice little healthy consolidation. This is your old 360. Okay, and that's what we thought we were getting to. My guess is now that we don't have puts in it, it should fall to 360 today. By the way, just kidding. Although it probably will happen. We see it happen enough times to where we usually want to vomit. But I think the key that we want to watch for is, can we break through the top side, right? When and if and when that happens, then we'd be thinking new highs are coming, and time to start looking for long plays there. Right? So we're keeping an eye on our buddy Tesla. Talked about CrowdStrike at the end of last week. Nice little 340 shelf here, and yeah, looks like the overall look of a head and shoulders type pattern. I do like to remind everyone that I wouldn't get too near as caught up in the is it a head and shoulders? Is it a rounding top? Is it a double, triple, something or other? Is it an ice cream truck? Is it a puppy dog? You know, is it the Olympics 5 rings? Who cares what it is, right? As much as what is the breakdown point, right? Certainly, if we did call this that type of pattern, it's kind of give us a bearish warning. But at the end of the day, 340 is the level that the bulls are defending here. So if we take that out, regardless of what this is up here, right, the trade is the same. So whether this was here or not, whether it has a name or not. Breaking this down would be where it's oh, right? And I'm probably targeting uh, certainly 300 overall. So we like that little setup there. And who else? I tell you, bigger picture. So this we'll talk about more today on smart trades. But gold, sure, you know, giving what looks like a bullish look here. Um, Consolidation. So this can be played one of a couple ways. Certainly, when you see a bullish pattern of any kind, we're always more than welcome to get in early so that we're in it for the breakout. The problem is there's nothing saying that we will, right? So could be played any number of ways, right? But in smart trades, looking at ETFs, obviously we might take a look at the GLD. Obviously, going to open up a couple dollars lower. Going to go open up down here somewhere. So another reason why when we have something linked like this, like GLD and gold, I see a lot of technical analysts that'll, you know, uh, do their homework, so to speak, on here on the GLD. I always tend to like to focus on the underlying, right, gold. So same thing. A lot of times when someone's looking at the SPY, well, I kind of like to look at the S&P. I like to look at the thing trading a billion shares versus millions, and what ultimately is probably the tail wagging the dog. So someone, I noticed someone had drawn a similar pattern here on the GLD. I'm like, well, and the fact that GLD had popped out of it, right? So if I connected here and here, I'm like, well, I think I'd rather wait till gold got through, right? And sure enough, that will have paid off here. I just waiting for the actual, what I think is the actual driver of the move. Right? So I'm certainly not a GLD expert, a technical analyst, right? So, but what I've experienced is that if we focus, right, on the underlying, probably increase our odds a little bit there. So we're going to wait for gold, but it's nothing to say we couldn't. This implies a bullish resolution to the upside, right? So, nothing saying somebody couldn't get in now, but the higher probability, no different than anything else, right? The higher probability is to actually wait for the breakout, kind of like CrowdStrike. Let's say we did call that a head and shoulders. The higher probability is to wait. Wait for it to actually break down. Prove you're right. So, but anyway, so we're gonna keep an eye on that. Um, hmm, yeah, I don't really know what to do with that. Keep getting these little messages. Um, yeah, Jeff. So Bitcoin, yeah, to me, when you look at it, I think again, those of you that wait a minute, Jeff, you're in my mentoring program, aren't you? I believe you are. Maybe I'm wrong. But if you check out, if you follow the newsletter that we post every Monday, where we update Bitcoin, first and foremost, there seems to be this nice, pretty well-defined line in the sand at um, that 92K area. Oops, let's see. I can pull this up here. Mhm. Maybe I can't. Might take me too long here to get this up. Whoops. Bitcoin. Whoops. Try this again. Oh boy. Give me one moment. Okay. Like I said, I think you probably have that access, but okay. All right. Pull that up for you. And here we go. Yeah. So if you check out that newsletter, you'll see the Bitcoin stuff. I was trying to pull it up here for everybody as well. So give me a second. Hey, look, it's me. Do, 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 do. All right. Everybody see the Bitcoin there? Should be trading view. Two cute little blue lines I just threw up there. Everybody see it? All righty. Anybody want to tell me what that looks like? And yeah, so just a reminder, if you are in the lifetime trading system, that newsletter is posted every Monday morning before the market opens. And I do a little Bitcoin breakdown. And kind of has a look of a topping pattern, doesn't it? Yes, it does, Brian. That's exactly what it looks like. But again, as we just got done saying with CrowdStrike, it really comes down to that little zone, maybe call it between 91.5 and 92. I've been calling it 92, right? But taking that out would seem to imply lower. Um, and again, been a great run up. So I don't know that should be a real shocker. Now, another thing to consider too is if we kind of panned out a little bit. I don't know how far this thing will let me go with. I don't have my account here. I don't have my login information here, so I don't know how far this will let me go. But give me a second here. Yeah, it's not gonna let me go any further. Another thing too that's worth kind of just pointing out. Hey yo, I don't think it's much of a surprise, but something in this in that type of area, it kind of makes you wonder, you know. But yeah, yeah. So this is what we were looking at, and we had a level kind of drawn right through here at 100. So again, if you read, I think 2 weeks ago in that newsletter, right here. Right? So our thought was we're kind of consolidating here between this 92 and 100. If we take out 100, we should be running back to some highs. And notice the fake out, right? The false breakout that tends to be bearish, no different than a false breakdown tends to be bullish, right? So once we did that, that implied this all happened in between the newsletters. Once we did that, that implied a fall back to 92. There you go, 92-ish, right? Bitcoin's certainly a little too choppy to get too cute on the numbers, but you get the idea. Look where where we keep coming in, and you'll notice today new low. So if we stay down here, you know, definitely, we go and close below, call it at least below 91, 90. Then let your eyes do the talking for you. Certainly looks like something going lower, right? But yeah, so that's the kind of the topping process we were talking about for a while. Now I don't know if that's the end of Bitcoin's run or anything, right? I don't know how we can have a triple bottom at the top of a rally, Alan. Not sure if that's physically possible, but maybe you're looking at something different. Oops. Yeah, they went our free. But anyway, okay. So let's come back on over here. Back to where we were. So yeah, so that's what it looked like there too. All right, my screen back up there. Hopefully that's working for everybody. Yeah, I don't keep my login info over there, but TLT wise, I mean, it's certainly, we've had yields rising quite a bit lately. By the way, anyway, I keep meaning to reach out to tech support, but you may know why you can't get, or have they changed this? I haven't taken the time. We don't look at this often enough for, I keep thinking to reach out to ask them if I've missed something here, or just simply look it up on Google, but it's never made it to my priority. But keep trying to get yields back up in the 10 year, and it doesn't want to come up. So one of these days I'll make that a priority. But yeah, so we look here, obviously new lows. I think the concern back here, taking out the 88 area. Okay, we haven't really been following it a lot lately. Sometimes it, makes it in our, front mirror, if you will, and we just didn't. But this 88, I think once you take that out, then you're thinking lower. From here, let's pan out and take a little bit of a look. I mean, it certainly looks like we can, that we should be thinking down here at minimum, right? Testing that low. Let's pan out. Ugh, real yucky. That's incredible. Whee! Right. Remember that old breakdown there? Nice little trend line, and once we broke, whoa! So I don't know. I mean, if I'm looking back here, I mean, a lot of support coming in right around that same 82. You breached it here, but look back here. Look how often you're holding up right around 82-ish. So, anybody see anything interesting here? That could be developing. I mean, you already have a positive momentum divergence here. And you could be putting in both a weekly and a monthly positive divergence there. So, but Wyckoff disagree. I'll take your word for it. Not something I'm too terribly into anymore. But yeah, so that's kind of things we're looking at here, market wise. Couple stocks to watch, and like I said, take out that at the bottom of that channel. I think that's when you start looking at odds increasing for a correction. Then we can start talking about levels to watch from there. Obviously, you can see we have multiple levels from the past that may or may not matter. I do think you get down to that 56 right down here. I think this is something worth a watch, but I think if you take out the bottom of this is not going to hold up. This isn't probably going to hold up. This is a pretty important one down here in the 5400, right? So, and 10% ish, get you close to there, get you here to down to this area. So I don't know how important this one is anymore, but this is one I would definitely keep on the radar. But yeah, we'll update it as we go, my friends. So until next week, everybody have a great one. See you on the rest of the calls.